So let's talk about managing the long put strategy. And as always, we've two ways of managing the trade: the pre-trade phase, which is before we've even placed it, and the post-trade phase. Let's talk about the pre-trade phase. So the big question is, what strike price should you pick? And it really depends on whether you're very bearish or not. If you're really bearish on the stock and you think it's going to fall, use an at the money strike or an out of the money strike price. But if you're kind of bearish but you just want to give yourself a better chance of winning, use in the money strikes. It will cost you more to buy in the money strikes, but your chances of winning are higher. Our preference is to buy in the money options because we're paying for less time premium, and time premium increase your break even. So that's why we prefer to use in the money strikes. What time frame should you pick? Well, we say go out as far as possible and give yourself every chance for the trade to work out in your favor. So going out a longer time frame is a lot better than picking a shorter time frame. You'll pay a little bit more for the option, but you're giving yourself more time for the trade to work out. So what about after the trade is placed and the share price reaches its downside target price? Well, the very simple thing to do is to sell the put option for a profit. So you would do that before the expiry for Friday. You will just go in and sell, and we've shown you how to do that in later videos. But what happens if the share price does not reach the target price? Well, in that situation, your put option may be in a profit or a loss situation. So go back to your profit and loss tables and consult them. You'll see whether you should be in a profit or a loss. And what you will do is just sell your put option again for that profit or loss. And it's important to take action if you change your mind during the strategy. So if you buy, for example, a put option that expires in a year, and all of a sudden you've upped your target price, well, then you need to change your strategy and you may need to sell your put option early. So what happens then if you do get to expiry Friday and the share price is above the strike price? Well, there's nothing you can do here. You're going to make a full loss in the trade and lose your entire investment. So that's the one thing we want to note, and we'll talk about it in position sizing later on, that when you buy options and if the trade doesn't work out, you can lose your entire investment.